Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we're diving into Nvidia's growth signals big gains for these undervalued stocks. Let's talk about Nvidia, a company that's currently trading at about 80 times its trailing earnings. Similarly, Advanced Micro Devices has been trading at multiples reaching into the hundreds, and even Intel has seen its multiples stretch to 100 times its trailing earnings. While these figures might be daunting, they hint at the enormous potential the market sees in AI technologies. Analysts are projecting astonishing growth rates for these companies, with Nvidia expected to see a 50% growth rate over the next 2 years. But here's a twist. There's a way to capitalize on the AI revolution without having to navigate the choppy waters of choosing which AI company will come out on top. The key? Energy. The AI revolution, poised to become a multi-trillion-dollar industry, will require an astronomical amount of energy. The United States, along with countries around the globe, will need to ramp up their energy production like never before. Today, we'll explore opportunities within the energy sector that stand to benefit from the AI boom. We're not just talking about any investment. We're talking about strategic investments that allow you to ride the AI wave with less risk while potentially reaping significant rewards. Let's start with a closer look at how AI technologies, particularly high-performance computing chips like Nvidia's H100, consume energy. These chips, essential for AI processing, can use about 700 watts of electricity each. That's like having 7 of those old 100-watt light bulbs running at full blast just for one chip. On an annual basis, each of these chips can consume as much electricity as the average single-family home in the US. This brings us to an interesting point. The growth in AI technology is not just a boon for tech companies. It's a golden opportunity for the energy sector. With AI's insatiable appetite for electricity, energy producers, utilities, and renewable energy companies are set to see a surge in demand that could drive growth for decades. Let's spotlight a few players in the energy sector that are well positioned to benefit from this surge. Number 1, Nextera Energy, ticker NE. A colossus striding across the renewable energy landscape and the proud proprietor of Florida Power & Light. Renowned for its unwavering commitment to clean, renewable energy sources, Nextera Energy stands as a beacon of progress in the industry. It's not just another utility company. It's a pioneer, leading the charge toward a sustainable future with its significant investments in wind and solar power. This commitment is evident in its expansive portfolio, which boasts of being one of the world's largest producers of wind and solar energy. With a visionary approach that seamlessly blends innovation with environmental stewardship, Nextera Energy is reshaping how power is generated and consumed, making it a critical player in the global transition to renewable energy. Beyond its environmental contributions, Nextera Energy is also a heavyweight in the financial markets, often highlighted for its robust financial performance and strategic growth initiatives. The company's market cap, running into the billions, underscores its colossal presence in the industry and its attractiveness to investors looking for stability combined with forward-looking growth. Notably, Nextera Energy stock has been a beacon of growth, outperforming many of its peers in the utility sector by leveraging its focus on renewable energy to tap into the growing demand for clean power. This strategic positioning not only provides the company with a competitive edge, but also aligns it with global energy trends, making it a compelling proposition for investors keen on sustainability. In recent news, Nextera Energy has continued to make headlines with its ambitious expansion plans and strategic acquisitions, further cementing its position as a leader in the renewable energy sector. The company's forward-thinking investments in grid modernization and battery storage technology exemplify its commitment to innovation and its proactive approach to addressing the challenges of the energy transition. These moves have been well received by the market, with analysts and investors alike recognizing Nextera Energy's potential to drive long-term growth in the green energy space. This brings us to an interesting point. The growth in AI technology is not just a boon for tech companies. It's a golden opportunity for the energy sector. With AI's insatiable appetite for electricity, energy producers, utilities, and renewable energy companies are set to see a surge in demand that could drive growth for decades. But hang on, let's pause for a brain tickler before we dive deeper. What's your take? Which do you think will power the future of AI more significantly? The breakthroughs in chip technology or the surges in green energy production? Drop your thoughts in the comments. We're curious to see where you stand. Number 2. Exelon, ticker XE. We find another titan in the energy domain, albeit with a different focus. Exelon boasts a vast network of utilities servicing the densely populated corridors of the Northeast and Midwest regions of the U.S. This strategic geographic positioning allows Exelon to play a pivotal role in the energy supply chain, delivering electricity and natural gas to millions of customers. Exelon's strength lies in its diversified energy mix and its substantial investments in nuclear, wind, solar, and hydroelectric power generation. This diversified approach not only reduces the company's environmental footprint, but also enhances its resilience against market fluctuations, making it a stabilizing force in the energy sector. Exelon's prominence extends beyond its operational achievements. It is a significant player in the stock market, with its shares being closely watched by investors. The company's commitment to operational excellence and financial discipline has fostered a level of trust among investors, reflected in its stable stock performance. Recent developments have seen Exelon focusing on strategic divestitures and acquisitions to streamline its operations and bolster its core utility business. These strategic maneuvers are designed to enhance shareholder value and position Exelon for sustainable growth amidst the rapidly evolving energy landscape. Number 3. Xcel Energy, ticker Xcel. With its commanding presence in the Midwest is another utility that deserves special attention in the context of the renewable energy transition and the burgeoning AI sector. This utility is not merely adapting to the shift towards renewable energy. It's actively positioning itself at the forefront of this transformation. By strategically pivoting towards renewable sources such as wind and solar, Xcel Energy is laying the groundwork to become a pivotal player in powering the future's AI-driven technologies. Xcel Energy's commitment to renewable energy is not just a part of its corporate ethos, it's an integral component of its operational strategy. The company has set ambitious goals to reduce carbon emissions and increase the share of renewable energy in its portfolio. This forward-thinking approach aligns with global trends towards sustainability and positions Xcel as a leader in the transition to a cleaner energy future. By investing in renewable energy infrastructure and technologies, Xcel is ensuring that it can meet the increasing demand for clean energy, driven in part by the energy-intensive nature of AI technologies. Moreover, Xcel's focus on renewable energy and sustainability has garnered positive attention from investors and the stock market. The company's shares reflect the growing investor confidence in utilities that prioritize green energy initiatives. Xcel's strategic investments in renewable energy projects have also positioned it favorably for potential federal incentives and grants aimed at accelerating the U.S. transition to a greener economy. This strategic positioning not only enhances Xcel's appeal to environmentally conscious investors, but also secures its place in a future where renewable energy becomes increasingly central to our energy consumption patterns. In the stock market, Xcel Energy has been recognized for its stability and steady growth, attributes that are highly valued in the often volatile energy sector. The company's dedication to maintaining a balanced and diversified energy mix mitigates risks associated with fluctuations in energy prices and regulatory changes. This stability, coupled with Xcel's commitment to innovation and sustainability, makes it an attractive option for investors looking to contribute to and benefit from the renewable energy boom. Xcel Energy's role in the energy transformation is further highlighted by its recent initiatives and partnerships aimed at integrating AI technologies into its operations. From smart grid technologies to AI-driven energy management systems, Xcel is exploring ways to enhance efficiency, reliability, and customer service. These initiatives not only improve operational performance but also set new standards for the industry, demonstrating how utilities can embrace technological advancements to meet future challenges. As Xcel Energy continues to navigate the transition to renewable energy and leverages AI to optimize its operations, it exemplifies the dynamic interplay between technology and traditional industries. The company's journey underscores the importance of adaptability and innovation in staying relevant and competitive in an ever-changing energy landscape. For investors, Xcel represents an opportunity to engage with a company that is not only contributing to the renewable energy transition, but is also poised to thrive in the era of AI-driven technological advancements. As we wrap up, let's take a closer look at these gems in the market. Nextera Energy stands out with a colossal market cap of $129.84 billion and a healthy dividend yield of 3.22%. Its PE ratio is set at 17.72, suggesting a stable investment with a one-year target price that implies an 11.19% upside. Moving on to Exelon, a robust contender with a $37.15 billion market cap and an appealing dividend yield of 4.05%. Its PE ratio of 16.08 could indicate a slightly undervalued stock, with a modest but solid 3.54% expected rise in its target price over the next year. Lastly, Xcel Energy, with a $29.67 billion market cap and a generous dividend yield of 4.07%, also has a PE ratio of 16.76. It shines with the highest expected price appreciation of 16.98% among the three, suggesting a potentially lucrative opportunity for investors. Each of these stocks offers a unique blend of value, growth potential, and stability, making them smart picks for those looking to diversify their portfolio with undervalued stocks that have strong future prospects. As we conclude, remember, the AI revolution is not just about the latest technological innovations. It's about understanding and investing in the infrastructure that will power these advancements. Energy is that critical infrastructure, presenting unique opportunities for investors to benefit from the growth of AI without directly investing in the tech companies themselves. As we power down this video, we're curious. If you had to invest in the future of AI, would you bet on the tech giants crafting the chips or the energy dynamos fueling them? Light up the comments with your electrifying thoughts. Please remember to like this video and subscribe to our channel for more insights on stocks, the stock market, and financial tools to grow your net worth. And remember, this video is for informational purposes only and isn't financial advice. Make sure to do your research or consult with a financial advisor before making any investment decisions. Thank you for watching, and we look forward to bringing you more valuable content in our next video. See you then.